Hello everyone, welcome to SanskarEdutech. I am Deepak Sawan, Assistant Teacher of PDT Turukia Junior College of Commerce and Science. Today we are going to discuss one of the most important topic of SYJC, that is dissolution of partnership firm. Students, this is most important topic. As I said, there are 5 content or 5 topics which are related to the partnership, namely partnership final account, admission of partner, retirement of partner, dissolution of partnership firm and death of partner. These are the 5 important chapters you are going to learn in SYJC syllabus in the subject of bookkeeping and accountancy. The topic which you are taking for today's discussion is dissolution of partnership firm. Just see the meaning first. As per the Indian Partnership Act 1932 signifies complete termination of business involving the closure of operation, disposal of assets to pay off liabilities and settlement of accounts among partners. In short, whenever we say dissolution, means we want to wind up our business or partnership firm. Student, there are so many reasons where business is going to be closed down. Just see the reasons for dissolution one by one. The first important reason is, as per the Partnership Act or Partnership Deed, if the firm decide according to the partnership deed, they can dissolve their business as per the contract given. Second reason, as per the terms of joint venture. What do you mean by joint venture? Joint venture is an agreement between 2 or more partners where on contractual basis they want to work on a particular task. After completion of that task, automatically the firm get dissolved. Third, disputes among the partners. Any of the reason, any of the misunderstanding of sharing of profits and losses and all, may be a chances that many of the firms are going to dissolve because of disputes among the partners. Next, order of the court, and last but not least, insolvency of the firm. Insolvency means the partner were not in a position to pay their dues and finally they want to wind up their business. So these are the basic reasons where firm is going to be dissolved. Next, we see number of account to be prepared for finalizing dissolution statement. Means the question of final account, we need to prepare following accounting heads. Accounting heads are majorly important over here. First one, partnership partners capital account. Second one, realization account. And third one is cash and bank. But along with these 3, one more account is need to be prepared, that is called partners loan account. When we are going to prepare partners loan account, when it is mentioned in the balance sheet. If it is a given balance sheet, partners loan account is there, in that time we want to open or prepare partners loan account. Next, when insolvency case is there in the question, in that time 2 more accounts needs to be prepared, that is liabilities account and deficiency account. Now liabilities and deficiency account is need to be prepared only in the case of insolvency of the firm. What do you mean by insolvency of the firm? Where all the partner going to be insolvent. In that case, that is to be called as insolvency of the firm. In that time we need to open 2 more account along with these 3, partners capital account, realization account and cash and bank. 2 more accounts is need to be prepared over there, that is liabilities account and deficiency account. Afterward, see the important journal entries of this topic. What is given in the question, that is the first important mark. In a dissolution, they provide you one balance sheet, that is nothing but balance sheet of the old firm along with the adjustment. In a given balance sheet, whatever assets are there, that all the assets are we are going to transfer to realization account. So our first entry comes to asset transfer to realization account. Entry comes to realization account debit to sundry assets. Second, along with the assets, we are going to transfer our liabilities to realization account. So our entry for this transaction is sundry liabilities account debit to realization account. Third, whatever assets and liability now we are transferring to the realization, now some of that asset firm always to try to sold out. So our third entry is assets sold by the firm. For that, entry is there bank account debit to realization account. Fourth, liability is paid by the firm. If the firm's liability paid itself, then entry comes to realization account debit to bank account. Next, assets take over by partner. Out of that assets, some of the asset is not sold out. In that case, remaining assets were taken over by partner. In that case, we are going to pass the entry in the books, partner's capital account debit to realization account. Next, liabilities take over by partner. Along with the assets, suppose any partner decide to take the liabilities, then that time we say realization account debit to partner's capital account. Next, the important entry always to be there in the question, that is called realization expenses or dissolution expenses. So entry is that realization account debit to bank account. Next, partner's loan repaid. If any partner's loan is given, in that time silently we need to say or set off the account of partner's loan account debit to bank account. Afterward, one of the most important entry always to be there in the question, that is distribution of past profit and losses. What do you mean by past profit and losses? If in the given balance sheet any kind of general reserve or profit and loss account is given, in that time we need to distribute that profit or losses among the partners in a given ratio. So in case of general reserve, entries to be there, general reserve account debit to partners capital account. So like this we need to pass entries concerned to the given question, and finally we want to close the account. Now student, here the main important question is how to close the account. When we are preparing suppose 3 to 5 accounting head, so which account is closed first? That is our question. So there is some order which we always to be followed while closing the accounts. Number 1, first close realization account. Whatever balance comes in the realization, transfer to partner's capital. Secondly, we want to close partner's capital account. If any case of insolvency or insolvent partner, that account close first. His deficiency of that insolvent partner, first transfer it to the other solvent partners, and afterward that account is going to be closed. Then when we close other partners capital account, their balances we are going to transfer in cash and bank account, and in normal situation, in simple dissolution, finally our cash and bank account get tally. Important note, in case of insolvency of the firm, I already said we need to prepare 2 more accounts, that is liability account and deficiency account. In that case, cash and bank account, when you close, you get a difference in that particular account, transfer it to the liability account, and when you close liability account, that difference of liability account transfer it to the deficiency account, and finally our deficiency account get tally. So guys, in this way we want to consider the question while we are solving. We want to follow the order and sequence. The most important thing is that in this topic you can score full marks because there is no question of taking any calculation of ratios or any entries concerned to the goodwill, so called, that is there in the topic of admission and retirement. So on scoring point of view, this topic is again very important. Thank you very much.